entrepreneurship has always been the way.
Investing is important because it's the only way you are going to be able to get rich and wealthy for your family. We can close the wealth gap by working together.
Market Monday is the biggest investment show ever.
My life has literally changed since watching EYL.
When you can make people money and you can add value, they're going to be forever indebted to you.
And I promise you this year, I'm going to make y'all even more money.
Check.
All right, I hear you now. Check, Mike, check, 1, 2.
All right. Check.
All right, I hear you now. Check, Mike, check, 1, 2.
All right,
Okay.
we live. Everybody's good. Okay, everybody's good. Happy Monday, y'all. Happy February.
Yep.
It's
Happy Black History Month.
Happy Black History Month, although we make history every single day. They said February is the perfect month. This year is a perfect month. So Monday started the 1st, and every Sunday will end in a 7th. Multiple, right? So this Sunday will be the 7th, following the 14th. Then we got the 21st and the 28th. So it's a perfect calendar month.
Like they designed it the first time before Julius Caesar changed it? Oh, wow.
Perhaps.
Give it up for colonialism.
Perhaps. A little fun fact for you. How you feeling, my brother? How's the temperature in Houston?
It's warming up. Thank God. Shout out to H-Town. My Lord. But yeah, it's cold everywhere else, but it's good here. How y'all feeling?
We are alive and blessed, and we are in a frigid zone. I woke up yesterday, it said 1. I said, this cannot be.
Oh,
but
wow.
it was correct. It was 1 degree. But it's part of being in New York, man. You deal with these cold winters because the summers are spectacular.
Absolutely.
Shotty,
how you feeling? Listen, I saw you in Home Depot, my boy.
You may feel different.
I need the Home Improvement Rashad series this summer, please.
Facts. It's coming soon.
Thank you.
Coming soon. Home Improvement on the wake up, but it's all good, man. Shout out to everybody. February's on. It's a lot going on in the month of February, for sure. So we just getting started, and we got a lot. As far as Earn Your Leisure, we got Blackout.
Yep.
On Wednesday, 9:00 Eastern Standard Time.
That's a lot to talk about, bro.
It's a lot going on. Thursday, 6:00 Eastern Standard Time, we got a special guest. Somebody that has always been a steward and a shining light, and somebody that recently just came up off a couple $100 million. So
a couple hundred.
Charlemagne the God. Charlemagne the God.
Peace to the God.
Highly anticipated episode. It was a lot of conversations about podcasting and content, and Netflix and ownership
and money.
So,
you know what I mean? You just don't end up on the cover of the Forbes like that. What's going on? Yeah. Not that we following everything, but people want to know. 200 million, that's a lot.
It's important.
Yeah.
All things will be answered.
They said it's no audio. Can you hear? If you can hear, put thumbs up. If you can't hear, put thumbs down.
They can't hear us at all.
Yo. Thumbs
Mic
up.
check 1, 2.
Check.
If you can hear us, put a thumbs up. If you cannot hear us, put a thumbs down.
Oh, I got it on my joint.
Yeah, some saying audio good. Some saying they can't. Maybe refresh YouTube and come back.
Oh, yeah, refresh your YouTube.
Those people might be lagged.
Yeah.
They might be lagged.
Okay.
They might be when they first came in.
Yeah. OG. Or maybe the comments is lagging. OG. You here now. We good.
So let's get into it.
A lot to talk about.
Let's not waste any time. We
Let's
got some other announcements we'll make later. But what's the investing fact? What's the investing fact of the week?
It's quite a few. It's a lot going on. There's some data that got leaked that we'll talk about on Blackout on Wednesday. But recently, the U.S. government announced 307,000 layoffs. UPS 78,000. Amazon 30,000. Intel 25,000. Nissan 20,000. Microsoft 15,000. The interesting part, how for every job loss that is created in the market, it takes 10 NVIDIA GPUs to replace it. So let's Go through the numbers again. U.S. government 307, UPS 78,000, Amazon 30,000, Intel 20,000, Microsoft 15,000. How many GPUs do they need to replace the productivity? That's number one. Number two, Tom Lee's Bitmine unrealized Ethereum loss rises to 6.6 billion. One of the most important lessons you're going to learn is the asset that you buy is only as good as the price in which you enter it. I like Tom Lee. I think he's a great analyst, great investor. But when anyone tells you it doesn't matter where you buy the asset, it's a load of bullshit. This will go down as one of the biggest losses if this closes out in history. And for the first time since adopting Bitcoin in 2020, MicroStrategy has had 7 consecutive months of negative returns. The price that you pay for the asset means everything. Please put it in chat.
That is a big old fact. I'm glad you brought up the MicroStrategy. It's interesting. I think the average price that they purchased Bitcoin was, I think, around 540 billion. And I think it finally went under that amount. Yeah, it went under it for the first time in history. When you're talking about negative quarter after negative quarter, it brings up the question of potential, and there have been some rumors of delisting at some point, right? How long can you have negative quarter after negative quarter, right? At some point, they're going to start looking at this a little bit differently.
Yes. You can buy a Penthouse and Billionaires Row, but if you're paying 50% above asking, that is not a long-term strategy. I like Michael Saylor. This weekend, it was revealed he has some enemies in the banking industry that we will talk about on Blackout. I said this on Stock Club last night. Kudos to all of you who were on the call. But when you're investing in an asset, you have to know who your competitors are and who are allies of them. I kept saying he's going to be the new Cathie Wood in the realm of they're not going to let him solely get the highest gains out of the market. I mean, he's not a part of their ecosystem. But the mistake that he made, the most glaring one, is buying at any price. The price that you pay matters a hell of a lot. And I told you at InvestFest on stage, we would drop to 78,000, and here we are. Stop buying great assets at bad prices.
Yeah. I'm 100% with you. It was, and I brought it into question a few times, right? Like you buy it at 97 when it's at 97. You buy it at 115 when it's at. You buy it at one. At some point, these averages of where you bought it at the low are going to start to appreciate, right? Like if I keep buying it, it doesn't matter that I had it at 25,000. My average cost for it now was 80,000, right? Because I'm buying at every point. So you got to be mindful of that, especially, and a lot of people were like, "Oh, with dollar cost average, this is something very different."
No, he's averaging up, if anything.
Exactly, he's averaging up,
but it's still dollar cost average. Oh, what, you have the heat on at like 90?
No.
What's the heat?
The show just on fire, my guy. That's all.
Yo, I'm about to pass out. I'm in danger of passing out. If you see me pass out, everybody don't panic. But
we'll
it's a heat emergency in here.
It's 67, bro.
It's like Hawaii.
6-7.
Turn
the heat down for my boy.
Please.
In 5 minutes, he's gonna tell me he's cold. That's why I keep it at 67.
Yeah, I'm sweating.
And for the record, I like Michael Saylor in theory. I like Tom Lee, but man, it never works out when you just buy an asset at any price. Go on ChatGPT and say, if anything else, take the high and just divide it by 2. That's where you need to stop buying. Especially if you're running a fund or you're managing money for other people, you can't continue to buy and it's 10% from the all-time high. And a lot of you are doing it in your personal portfolio and you're bleeding now. You're like, hey, what do you think about Oracle?
What about the guy that brought Bitcoin every single day for the last 10 years or something? I don't want to, but long story short, he put $80,000, he put like $100 a day. He put $80,000 into Bitcoin and he's now worth $1 million. So dollar cost average, he is dollar cost averaging. He might have started at a wrong time, but by definition, he actually is dollar cost averaging.
Well, not in the sense that he's not buying. So like that would be if you're investing into the company, right? Like he's buying, I guess, sort of Bitcoin shares, but not really. But he's also selling shares of the company to buy more Bitcoin.
That's the second.
He's buying Bitcoin. But
But,
mean,
but
but he's
Rashad, you
selling
make
his
a good
company,
point,
right?
right?
He's selling his company shares to buy that Bitcoin.
yeah, but it's
The
like you
di-
go to work and you trade your salary for buy Bitcoin.
But your company
di-
shares are being appreciating because of the fact that you're buying it. So
that's the key.
you know what I'm saying?
His company is tied to something that's not
That's what I'm saying.
real. It's a holding company.
And the difference
The strategy is, because this is important. The name of the company is strategy. The strategy is not a bad strategy if you believe in the asset, because it's not like
Long term.
It's not like he's dumping all of his money in at one time. He is doing it strategically, as far as on a monthly or bi-weekly basis. He is dollar cost averaging.
But-
and if it does go to $1 million,
He'll be right. With this moment would be a glimpse.
he's over leveraged.
This is true, but the other part is that when it, like you said, when it's a depreciating asset, right? You have to figure out, and you're seeing this with a lot of companies now, which is, and Oracle's one, and we'll talk about how do you raise revenue?
Another fuck up.
How do you raise revenue if the asset that you're investing in is depreciating and you don't have another real way of generating revenue?
Well,
The difference is, real quick, Rashad, good point. The person who puts, to say, $1,000 in per day, the only capital that they're risking is their own. In his case, you're raising debt to then buy the asset, and then you're buying at a bad price. It's like a holy trinity of mistakes. You have a lot of shareholders to manage, and buying the dip or averaging, dollar cost averaging, you're supposed to average on the down cycles. He's buying on the up.
He's. I think the key, what you said, is that he's over leveraged.
Yes, that's a big mistake.
And he's built a company that's not a real company. It's a holding company.
They'll say that, you know what, they have a cash flow of over $3 billion, and they haven't had to touch that yet. But let's say Bitcoin stays in consolidation phase for the next 6 months. There's going to be some real questions that he's going to have to answer.
There'll be some pressure.
Or if it not even stays in, if it drops.
Or if it drops, I'm just saying if it
drastically.
I'll give you a price tonight. Yep.
Yeah, if it stays in this 70, but if it, let's say it drops to 57 or 58, bro.
And here's the thing you're going to learn: clients aren't loyal. This is why being debt free, going back to the all debt is good. This is a classic case of all debt is not good. If it does drop to 67 or 58 and some change, clients are going to treat him how they treated Burry in 2008 and 2009. And I long said ago on the show 2 or 3 years ago, the hedge that he needs is an actual tech product to offset the losses while you're investing in a great asset.
Mm-hmm.
He hasn't done that yet. If he does that, he'll be fine. But we're seeing a master class in why my thing has always been accurate prices on when to get in. You don't know this until you put your own capital in. You think, oh, Bitcoin is at 105. Let me just buy that 90 and it'll be okay. No, I told you in the summer we would drop to 78. I'll tell you tonight, later on, where I think we can go in Bitcoin. Will it be fine long-term, 5-year, 10-year? Yes, but sometimes you have to be able to weather the storm for a year to hit that 10-year horizon, and raising debt is not the way to do so.
So let's talk about the trading question of the week.
Somebody had a great question. If I've already mastered long-term investing, how can I get an edge in S&P futures? I'm gonna be very clear because I'm not playing for Black History Month. And kudos to everyone who tuned in last week. I appreciate you all so much. My advice for you would be to trade the Asian session first, then the London, and then the American close for 90 days straight. Your target should be 40 ticks. You should use 23 contracts. If you hit that target, you'll be, I think, at $11,650. If you miss one day out of the 90, you're not serious. Trade the Asian session first, then the London, then the American close. Skip the volatility, and look at those 3 sessions. And I want to be very clear because y'all are on a tear with the interviews, right? We have a small window while he's in office. And everyone listening, you have a small window while he's in office to become one of the haves, or you're going to be a part of the have-nots. We have a new Fed chair in. He's hawkish. And it's part of the reason why Bitcoin and the market dropped. You have a small finite window to take advantage of the volatility that is there, because the next president won't give you as much volatility, and we're going to have a contraction in the economy that may give us like a dead 3 or 4 year period. So now is not the time to be half in or half out. You have to be all in all the time. Can I ask you guys today, when you got up today, what time you guys start working?
6.
Shot? And I know you went to sleep at 2:30. I'm telling you now for the audience, play season is over. Either you're going to be dedicated or be left behind. The conversations that we all have privately, that exit number and great clip that you guys put out on social, kudos to the queen. And you need 10 million. I was saying this number 3 or 4 years ago, and people like, you're crazy. In our private conversations, everyone's saying the real number 30 or 40, though. You have a small window to execute. You can either bullshit and be left behind or be exceptional and create wealth and freedom for your family. Put in chat which one of you are going to do. So, Asian session, London, which is 2 a.m., American close, which is 2 p.m. If you're at work, have the laptop on your desk. Tell them that your kid's sick. You got to check on the schoolwork or something. Figure out a way to have that laptop in front of you 24/7. Great question. Love you.
I love you dearly.
Latinos for
I
EYL.
love you dearly.
Wepa. Shout out to all the Latinos.
Yeah.
Shout out to all the Latinos
shout out
out
to Benito, album of the year. Shout out to him.
Oh, yeah, the Grammys. We'll talk about that on Blackout.
Yeah, shout out to him.
Isaac Hayes has some conversations about
Interesting. He had an interesting perspective.
Did he? Shout out to my guy. What
He might. Yeah, it's a pretty interesting perspective. It's interesting.
Glasses Malone, I may call you. DJ Head, I may call you.
Regency bias.
Is now the time to buy Oracle stock?
I think this question comes from the news that was announced today. Oracle announced a $50 billion fundraising plan to build additional capacity to meet contracted demand from its cloud customers. When I saw that news, and I'll be the first one to say that I don't think this is the time. When I talked about it in the summer, we saw the headwinds. We could see like where we were headed. This is still caught in this OpenAI like web cycle. Like I put Microsoft in there. NVIDIA's kind of getting the tail end of it a little bit. Oracle,
and they're all fighting.
Yeah, they're all going to make money together. Do I think Oracle will be here long term? 100%. Do I think it will play a major role in the infrastructure of AI and data centers? 100%. Do I invest in it now? I'm not sure now, right? Because people are looking at it. How I feel doesn't matter. The market sentiment is what matters when it comes to this company. And when you look about 50 billion raised, that's nothing to sneeze at, right? But they've already said they're going to invest 500. And so now they're saying we need more. The thing is like, they haven't figured out how they're going to prove that they can make revenue or this is going to pay for itself at some point. So we're still in the early phases of it. So when the news was announced, we saw a slight uptick, and then it was like, well, will they be frivolous again with spending, right? When they raise that. And so there's still a cautionary tale around Oracle. Like I said, I still think long-term it does rebound. I just don't know if this is the floor yet. Like what we saw with Microsoft inside of the OpenAI story and that debt story, and then NVIDIA saying, hey, I know we said 100 billion, you gave us the option to, we never signed a contract that we were going to. Yeah. You saw some negative sentiment around that. Sam Altman put out a statement after close today. So do I believe in OpenAI? Yes. Do I believe in the AI story? Yes. Do I think this is the exact time to invest in that stock? I don't think so. I think what we need to watch over the next quarter for sure is that cloud space, right? Because when we're talking about cloud, we talked about that 359% revenue increase over the summer, which saw the stock soar. That was revenue that they hadn't seen before. That was them generating new capital. If that can continue while they're doing this build out, I think you'll start to see a slow uptick. But we got to wait till this quarter's done to see where they're at. I know they were at fourth place. They'll probably still be in that spot. But let's see if that percentage clicks up, right? Like they had some new hyperscalers that they put as customers. Let's see if the percentage can go from 3 to maybe 4%. Or maybe it goes from 3 to 5%. Like that would show, hey, there's a revenue growth engine right here that we can build on while they're doing this CapEx spend. So I'm not buying it now, but I'm still long term on it, and I'm interested in seeing those metrics.
I like Larry Ellison as an entrepreneur. Morally, maybe not so much.
Okay,
I like Little Larry or whatever his son's name is. Kudos
David,
to him. David. Kudos to David in the generational wealth, right? I like Warren Buffett, the Oracle of Omaha. who just retired from Berkshire. But unequivocally, and I love how you slow walk this kindly. I'm going to fast walk this harshly and say out of this race, Oracle probably is one of the biggest underperformers in tech. And the biggest thing that you said in that they also said in their report, they haven't figured out how to make money off the investment yet. I want to be very honest. OpenAI has some issues. Company I love that I championed going back to 22. NVIDIA and OpenAI are fighting. So much so, when they asked Jensen, and I think he was probably in New York, are you going to invest $100 billion into OpenAI? He said, I never made that promise. We were invited to invest up to that amount. I'm actually going to invest this money into XAI. For those you don't know, that's the investing equivalent.
Alleged. The last part is alleged.
Allegedly.
Okay. Thank
Allegedly.
You. Okay.
That's the equivalent of saying, I'm out on this player. I want to draft this player in the summertime. I think Oracle could fall to 113.72. Do I think it's a good long-term pick? Yes. Will they be fine in 5 years? Yes. Can they get the gains that NVIDIA got 2 years ago? Emphatically, I've always said no. That reversal from 336 down to where it is now is too much for me. They're down 40%. Good legacy company. But the question you have to ask, are they better than Microsoft, Palantir, TSM, AMD, NVIDIA, Eli Lilly, Amgen? No. SanDisk, Seagate? No.
Easy. Here's the other part to it, right? Just to add a little more context to it. So traditionally, it's a software company, right? And we've seen the hardest hit sector of the past 4 months for sure, definitely in 2026, has been software, whether it's Salesforce, whether it's ServiceNow, Snowflake, they've all been hit. And so they're not excluded from that, right? Here's the real question when you think about OpenAI. Is it in everyone's best interest to make sure that it succeeds is the real question. Because not only is Microsoft involved, Microsoft is invested, AMD has investment, NVIDIA has a huge, outside of the $100 billion, they still have a heavy investment. We said AMD, Broadcom, all the heavy hitters, these $1 trillion companies, all are invested in OpenAI or have partnered with OpenAI in some sort or another. SoftBank is invested, right? And Oracle is invested. So you're talking about, multi-trillion-dollar companies that are all invested in the future growth of OpenAI. Not to say that they haven't invested in other AIs as well, but their investment there is still, it's pretty significant.
For sure. But the thing that we talked about before is Sam Altman being the detriment and then his ego.
Yeah.
So, I like the interview you guys did with Jalen. Shotty, you made the point of slowing the game down, right, and finding your pockets. Sam is the person that's forcing the shots and fucking up the flow of the game. So much so that he had to lead, and everyone's saying, man, Anthropic looks really attractive. Why? Because they're going to set a ball screen. Pin down, they're going to hit you right in the pocket to hit a great shot. They found a way, and even with Microsoft, is one of my favorite companies of all time. They haven't found a way to make money off of Copilot. Now they're going to lean on Claude a lot more for some of those developments there, which all the rumblings you hear is going back to Elon, going back to Jensen, going back to Microsoft. The issue is Sam.
Yeah.
Like, Shadi, let me ask you, if I was erratic for 5 years, how long will we be partners? At some point, you got to say, even if it's profitable, the headache's not worth it. Sam is a prime, he's the Rodman with less performance. And they have to go to court soon. They have to go to, I'm here to be real in 2026. If y'all don't like it, it don't matter. You deserve to be wealthy, you deserve to be rich. But I'm not going to lie to you. He's underperforming.
I'm with you. I think I agree to the point where they've lost direction. Like, what is their thing, right? They've watched Gemini come and clearly be the new favorite. But these things happen fast, right? Like a year ago, we weren't saying that. And we are saying that, and they've proven to do that. In fact, I sent something in the chat. I'm like, yo, they're actually spiking the football now. Like now they're just really showing you what they always had the capability of doing.
Yeah.
Anthropic has come into space. XAI has come into space. So they have lost a little bit of direction. Jensen spoke today at maybe like 2 hours ago, and he was saying, I think the conversation that I had was taken out of context. I actually enjoy working with Sam. So that'll be interesting. He's going to have an interview tomorrow with Kramer. So I'll be listening to that very intently. But
for sure,
I'm with you. I think what is the direction of OpenAI at this point? I'm not sure. Yes, he has to go to comfortable. Elon is on his neck. So
as he should be if he funded it.
Yeah.
So this is the promise.
This is all part of the Oracle story, right? The uncertainty we're talking about OpenAI. When you say that you're investing $500 billion in infrastructure to make sure that this OpenAI development can go through, then that's how you get tied in, right? Because that's a large amount. So I just think not too big to fail, but it's in everybody's interest to have some success.
Well, they're all investing in each other, and that's why people think that it might be an AI bubble, because it's like if I give Ian $1,000, he gives you $1,000, and you give me $1,000. What are we doing?
And now it's 2,000 you give to me and I swing it back. It's like only a few of these companies are even exceptional. Even Oracle. Oracle's a needed company, but let's be honest, if Trump was not in office, people wouldn't have bet on Oracle. Most people in our community 3 years ago had no fucking clue who Larry Ellison was. No.
True.
Stop gambling. Put in chat, stop gambling. If you want the play of the week, you haven't listened. We gave you every important stock to invest in for the long term and real-time news before it even got out to the public. Now is not the time to gamble with non-exceptional companies. You have to invest in the most exceptional companies in one of the most tumultuous times to be.
So it's not a time to buy Oracle or not? No?
Hell no.
For the hell no. This is AI again, and everybody says it and nobody listens, but really early stages of it. And so this will be a time thing. We'll see over time how this infrastructure build out happens, how the energy, which is probably the most important thing, how that build out.
That's another, yeah.
Right.
So is it time or no? You said no. Ian said no.
Oh, I said no first.
Yeah,
I said
it's unequivocally no. 113.72 is where I would load the boat and start to look to get in.
Yeah, and I'm in calls already.
Gold and silver crashed last week. Silver had its largest crash since 1980. It went down 30% on Friday. Gold was down 15% one day. That was the largest drop in 40 years. And a lot of this is due to the new Fed chair. Allegedly, some of it is due to the new Fed chair, or maybe they just use it as an excuse to crash the market. We'll talk about the new Fed chair later, but and he's interesting because it's like, he's married to.
Or I thought that was fascinating.
Jane Lauder.
Hello, generational wealth.
May have heard of the last name.
And then her father, Ronald Lauder. Company that they own is called Estee Lauder.
Perhaps you've heard of it.
Ronald happens to be one of Donald Trump's best friends, and some contribute him to coming up with the idea to take Greenland.
Yep.
They say that was actually his idea. So it's all in the family. Relationships, once again, power of relationships, right? The son-in-law, Donald Trump's best friend's son-in-law, is now the Fed chair. Interesting.
You think he'll be the chairman?
Well, that goes back to the price of gold, right? So it dropped because it's like, okay, now we're going to have a strong dollar because we have a new Fed chair. But I think that's just temporary, in my opinion, because what's going to change? Nothing is really going to change. Still going to be spending money. Still going to have a tremendous amount of debt. Still haven't figured out how to actually, raise taxes efficiently or cut spending efficiently. So the overarching theme, at least for gold, that made gold go up, I don't think anything changed. I just think that it was just a short term. And like I said, some people have claimed some level of market manipulation from
some have, not us.
The big dogs to actually liquidate and close. A lot of people got squeezed out of positions. A lot of profit taken when something happens that drastically. and it went up so far, so it was bound to come back down. But
Mm-hmm.
the overarching theme that made gold go up, I don't think anything has changed since then. I think the confidence in the dollar is still low. The debt's still high. We're still going to be spending a tremendous amount of money. I mean, I don't think lowering interest rates just solves every single problem in the world.
No. Mm-mm.
Yeah, I think you answered it. Yeah, I'm with you. I don't think anything changed. The only thing that has changed is that people saw the run up and decided, all right, this might be a place to take some profit. If we were talking about the year end goal being 5,200, 5,200,
5,200, yeah,
5,500, and we're at 5,200, and it's January 30th. Oh yeah. We just take some part, and to the point where it ran so fast, right? We saw new price targets. I saw a couple of analysts had it at 6,300.
It sounds good, yeah. Mm-hmm. It sounds good.
Yeah. Yep. So you see these precious metals, silver, same thing. The story hasn't changed, and I think people need to understand that, right? Like you can watch something on the minute, you can watch it on the hourly, you can watch it on the day. Has the story changed? And if the story hasn't changed, then the investment's going to be the same, right? People are going to take profit. That's part of it. In fact, people need to take profit. When you see an asset run up like that, what's your metrics for when you're going to take profit or how long you're going to stay in a position? And that's what we're seeing. The story has not changed. The elements are still there.
And even on the stock side, considerable drawdowns. Oracle -49, Coinbase -55, Lululemon -65, Target -42, Adobe -53, Nike -52. So when you talk about sector rotation, a thing that I hate for retail investors, but one thing you do have to be mindful of is how do you hedge if the market is falling apart? Gold has been a preeminent asset to invest in for a long period of time. I think we went up too fast. There was some rumors, like you said, by others of market manipulation, potentially. And how far it fell, like big institutions need room in order to exit. Some positions got squeezed, and here we are. I would like to re-enter gold at 42.19 if we get there, and silver at 63.33. Do I think we'll go back up to 5,200? For sure. It's going to take time, but if you missed this first run up, wait to get back in. And for those of you who've been trading gold futures, great job. Like a lot of you have made between 10 and 40 grand over the last month and a half.
Yeah,
trading it. So stay locked in. But 42.19 is a area that I like to load up on gold, and then silver 67.33.
Yeah, I think people like they look at themselves as obviously retail investors, and sometimes you'll see a position run and you're like, man, I missed it, and it keeps running, right? But you got to think there's institutional investors and hedge fund managers who are in the same exact boat.
Absolutely.
They're in the same exact boat with a lot more capital. And they're like, I missed that run. I can't wait. We got to have a pullback for us to get into that position. And lo and behold, you see short sells, and okay, here comes a new opportunity for us to enter the position. You'll enter it, and you'll see it tick back up.
Yeah.
Okay. The thing with gold is that over the last 50 years, gold has increased 2,700% over the last 50 years.
Yep.
And the American dollar has decreased. The value of the American dollar has decreased 85%. So do with that information what you would like. But gold has gone up 2,700% over the last 50 years, and the dollar has decreased in value 85% over the last 50 years. So if history has any indication, there's no need to panic on the gold side.
Oh, for sure, yeah. And that trend won't reverse anytime soon.
Yeah, and that's when we talk about a long-term investment, you just keep it. Keep it.
Okay. Palantir. What is the end of year price target for Palantir? What is the outlook for Palantir? Palantir was in the news recently for having surveillance technology allegedly.
Oh, thank you, Troy.
In Minnesota, they made news for
allegedly in Venezuela as well.
Gaza Strip.
Alleged.
I'm not sure if that one was alleged.
Can you turn my camera off?
Alleged.
Blackout early. Big alleged. What?
Maybe. I don't know.
So price target. What's the outlook for Palantir.
You want me to give a positive price target after you said all that? They had a $1 billion quarter once again. Morally, I don't love this company. I do see they're going to fall back. I think eventually they're going to fall back to 137.89. By end of year, they should be at 243.39. They definitely have an America First approach. Allegedly, some of the software is in urban cities and urban police forces. Allegedly, as Rashad said, maybe some international locations. So for that reason, morally, I don't like to invest in it. But I do see a world where it can get to 243.39 by end of year, and due to the relationship that he has with the White House, and given the voting body that's in now, Palantir would do a lot better under a Republican regime versus a Democratic one. So,
all right, well, I'm going to have
something.
a full moment of transparency here. Shout out to everybody here in the chat. Palantir, I like that you used the word love, because this came up in a conversation today. Shout out to my brother Corday on the check-in. I said we got to take emotions out of investing. So sometimes, like, when we talk about moral investing, should we invest in companies? We've heard about them. I'm like, there might be an opportunity here based on the technicals for Palantir. We watched it trade under its 200-day EMA. We watched it pull back 30% from its all-time highs. If y'all know those are the metrics that I like to see, especially inside of a company. Then we start to look for price targets as far as strikes in the world of options. I say, there might be an opportunity here. I made my phone calls. I got 4 calls I got to make, Ian. I got 4 phone calls I got to make anytime I think that there might be something here. And actually, shout out to Ab on the check-in as well. I walked him through the research process of what I'm looking at when I'm thinking there's an opportunity. And what I saw is actually what played out. So you mentioned that it had $1 billion quarter, 1.4 billion. So what did that break down to? That broke down to revenue being up 70%, which is pretty impressive for a defense tech AI company. Where did the spending come from? So the U.S. government spent $570 million in government contracts. $570 million. So there goes $500 million right there. The other half came from U.S. commercial institutions. So that brought up about $507 million, right? And that's up 137%. So half of it you got coming from government contracting. The other you got from commercial enterprise. Who was that? That's pharmaceuticals, Merck, CVS, United Health, Airlines, Logistics, United, American Energy and Utilities. You got BP, Waste Management. There's a bunch of companies that are using it from a commercial side. So when you start to see things like that, there's an uptick in commercial use. That's a good sign for a company. And so when you set the price target of 242, it's crazy because I was thinking about 210. I was going to go a little bit under that. I'm starting to see the price analysts saying, hey, yes, it has sold off to a point where obviously it's trading under its 200-day. Didn't get to the 400, which is okay. And so I saw an opportunity here, and so we actually looked out and may have made a call on the appreciation of Palantir because of that price target raise from not just what I'm reading, but also from analysts and from the sources, the research that I had. I'm like, all right, there's an opportunity here to potentially see some appreciation. So shout out to everybody that did make money on that today. I see that they're after hours, they're up 7%. So we'll see how the market opens and if that can start trickling higher. I think so. I think it gets up to 160 tomorrow.
I get the not investing with the emotions part.
Yeah.
But at some point, do we feel complicit for investing in companies that mean us harm? We talked about Apple and Cobalt.
So this is a great conversation, and then I started to peel back the layers of which company doesn't mean us harm.
Well, technically,
that's the real question.
Technically, an option trade is not an investment in a company because you don't.
I know. I don't.
Technically speaking.
But even that, what company does at some point? If we pull back the layers, I started to just peel back like which company that I'm currently invested in. I couldn't find something.
I think we could all agree any multi-billion-dollar, multinational conglomerate, or multi-trillion, has blood on their hands of allegedly of some sort.
Alleged.
I do think allegedly, heavy on the alleged.
Heavy on the alleged.
I do think there are tiers to the
treachery.
harm. Yes.
Right.
And I've said on Apple, the cobalt mining using children. We're talking about Bitcoin and who some of the founders may have been paid by.
Mm-hmm.
But
So,
do you? But from a trading standpoint, how do you feel about that? Do you feel like if you trade in a company, it's the same as investing in a company?
some could argue because it adds to the volume of it. Like in one of the most profitable and easy trades to trade in the futures market is cotton. Because I'm black. The joke writes itself. I've never
That's
traded
wild.
cotton.
That's
Right?
wild.
So it's different than a long-term investment because a long-term investment can increase the value. But I think being a mouthpiece in addition to providing a certain level of volume, that's why I always say I knew the stock was going to fly, but I'm not going to be one to champion it while they're using it to allegedly profile us in urban environments.
Alleged.
So, allegedly. But Apple is just as egregious, if we're going to be honest.
I mean, they done scanned your face. You open your phone.
Oh, just what they've done in the mining in Africa.
Oh, there's so many layers to it.
Yeah.
There's so many layers to
Scotty,
it.
what you think, though? It's that blackout early. Come on.
I love no company.
It's nuanced. I get it.
Yeah. So that was like part of it. Their history of reporting, they've beat earnings 8 quarters in a row. And their Q4, this is like one of those when you go deep in the weeds. Their Q4 has been their best performing quarter over the past 3, and this was the Q4 earnings report. So all those factors were like, all right, there's something here.
Yeah.
Stay tuned.
I put in chat, how do you feel about it? Would you guys invest in Palantir? Do you think that trading is different? Because if you invest, you're an owner of the company. So now you're actually an owner and you're complicit all the way.
My God. That boy Euroed it and said, what do you think?
Yeah, I mean,
I'm like, ooh.
you invest $1.4 billion in a quarter.
That's tough, bro. I can't lie.
Yeah, you're not going to support the companies that's using the technology?
That's
all
tough.
right, good luck.
Yeah. America. We need 19 keys on.
They said, hell yeah, I'm making money with them.
No, it's a lot of no's. It's a lot
of when they lock your drama up and your friends, don't bitch to me about.
It's a tricky dilemma. It's a tricky one. Yeah.
Okay. Bitcoin, the moment we all been waiting for. Hit the like button and share.
Yes.
Hit the like button and share. Bitcoin, man, down 40% from its all-time high. It's around 78,000 right now. Rebounded a little bit from the intraday low, but Bitcoin put a post up about this, and it's actually interesting because a lot of people say that the 4-year cycle is dead or it's no longer, and it's actually following the 4-year cycle. Bitcoin always goes up and it comes down, and it always goes back up again historically.
Yep.
So this is the thing. Some people are saying, okay, Bitcoin is going to get to low 70s, it's going to hit 60. That's one crowd. Another crowd is like it's going to get to 30,000. It's going to fall to 30,000, 20 high 20s, low 30s. It's falling. And this is just the beginning of the whole situation. And then there's another crowd that said it's going to just completely fall apart because Epstein has been linked to Bitcoin. So there's a contingent out there that's saying that's just the Epstein coin, and it's gonna really fall apart completely because Epstein has been linked to Bitcoin. He said that he knows one of the 4 founders of Bitcoin in the email.
And allegedly contributed to him founding it. Allegedly.
All 5 of them. So
it's a lot of talk about Bitcoin right now, but it's definitely something that's of topic of discussion. So what's the outlook for Bitcoin?
The people who are saying that it's going to go to 20,000, I think you may be overreaching. And as a person who called it to go to 20,000 when it was at 60 before, there's too much institutional capital here. For the Epstein crowd, we'll talk about that on Wednesday on Blackout. But the truth is, no one cares about taking down a monster when you want to profit off of the monsters. That's going to come and go. I told you years ago, Putin too had involvement, and in Stock Club put yes in chat. I told you about this Epstein involvement years ago, probably 2 or 3 years ago. Most people didn't give a damn. I have Bitcoin going to 63,305. Would be a good place to get in. I said it on stage in InvestFest. When we get to this level that we're at now, I think, like you said, the cycle is true. And the great part about having a preponderance of data for an asset as popular as this, you don't have to guess where it's going to go. Like, I love the video that you put, because it's following it to a T. Some people start saying we're going to have a 6-year cycle. The 4-year cycle repeats. If we get to 63,305, you can buy in there. You can be all right. I think we'll start to see a bouncing point this week. But it goes back to not buying an incredible asset at a dumb price. If you bought at 125, whatever drawdown you're going through, that's your mistake. If you're down 25%, cut it, re-enter at a better price, and you'll be good. But the banking system was built on evil, and all of us have been involved in the banks. So.
Well, I mean, everything. I mean, if you look at it from that standpoint, everything is uninvestable. But also, yeah, Bitcoin said on the show it was going to fall, and it fell. But also, if you believe in it, you should have comfort that it historically has always gone up higher than it did before previously. So, yeah, I mean, rule of thumb, you never want to buy something when it's at its all-time high. It's even the real estate. You know, real estate and stocks have the same
principles.
Situation where you're looking for distress. If you house hunting, you're looking for distressed properties in good neighborhoods that may not be well kept, that you can get for under market value.
Yep.
That's what they teach you. So you go to a good neighborhood and you see the property that the grass is very high. The person might not live there anymore. They might have moved to Florida, or they might be elderly. They can't, but it's still a good property. But it's not as valuable as the other houses in the street. You do a little renovation, and before you know it, you can make $100,000 profit. Same rules apply for investing.
For sure.
You look for good investments. You don't just buy something because it's $1. That could be that's a bad stock, or a coin that's not worth anything just because it's cheap.
Yeah.
You look for a good investment, good timeline that is distressed in the moment.
Yep.
And Bitcoin is a good investment from the standpoint of historical, what it's been able to survive. It has a lot of institutional buy-in. It's currently distressed at the moment and probably has more distress to go.
For sure.
But it has upside potential. That's kind of like the number one rule in life.
Yeah, easy 25% gain is around the corner. Just hold for the long term. All of this goes away if you hold for a 2-year period and quit buying at bad prices.
Are we living in the times that this is the last time we see it under 100,000?
No. All that shit y'all talked about it going to 1 million. Where are y'all at? No. Like, that's the thing. If you study price action and price discovery, there are laws in which assets have to abide by.
Oh, it's going to go to 1 million. It has to go to 1 million. If it doesn't go to 1 million, it doesn't.
7 years.
Oh yeah, 10 years, 15 years. Yeah,
that's what I'm saying.
Not like next year. Not next year.
No. It was a bunch of them saying last year was going to go to 1 million.
No.
I'm saying in 2026, maybe 2027, we don't see this at under 100,000 again.
The floor will probably be the high where we're at now. So the floor will turn to 126 or 125. Yeah.
So they learned.
Yeah. Hold for the long term. All this goes away. If you buy a great asset and hold it for a long period of time, you can be disciplined and not just blow your money trying to look like you're rich. A lot of these problems go away. If you've been holding for a few years, you're good. So, but it's not going back to 20,000. You should have listened the first time.
Good night, Irene.
Sorry. Love you.
But even if
Which one?
it doesn't go to 20,000, if you're able to get it, even if you get it in the 70,000 range, 60,000
Yeah.
range, if it goes to 200,000, which is very realistic over a
It's
period of
hell
time,
of a return.
you're gonna more than double your money.
Yeah, and you don't have to. I know there's some people who are new to this, but you don't have to have $70,000 to buy it. You can put whatever fractional
What
piece
you can
of
afford.
what
Yep.
you can afford. If it's $100, if it's $1,000, like you'll get your fraction and it'll tell you in BTC what that is. So think about the percentage of that gain, right? Can your 1,000 turn into 25% over the course of a year? Yeah, it's potential, right? But so could your 10,000. So think of your investments in those terms.
And then other Bitcoin related assets, Robinhood
Yeah,
has all of these Bitcoin, Coinbase, all of these things go down as a result of Bitcoin going down. So Robinhood, we talked about MicroStrategy already. Robinhood, $89. And I think most people think that Bitcoin still has more room to go down.
Yeah.
So
I got Robinhood on my list for 2026.
Me too.
Because of that, I think there will be a rebound in Bitcoin at some point during the year. But I also think, and they kind of talked about the Trump accounts, and there's been some news that Robinhood is one of the leaders, as well as a few other brokerages that are going to be funding it. I know JP just said they're going to match the $1,000 last week. The predictive markets and their options trading, right? Like we've seen January was the 9th month in a row that the market was up. And so when you see markets that are trending in that way, and we'll see what happens in February, people are going to trade options because they know the volatility, but the appreciation that you can get inside of that market is a lot higher. And so when things are going good, people are trading options, and when they're not so good, then you start to see less of it. You start to see more puts. But when that call ratio is high, yeah, Robinhood, especially for a generation of traders who started with it and now they have advanced platforms. Yeah, I still like them.
the prediction markets too.
No, that's what I said. Prediction markets. Yeah, inside it. Yeah, Letitia James is trying to knock it though. You see that?
In New York?
Yeah. I'll send you the article on Wednesday. Yeah.
Entry point, once again, 63,305. I see it in the comment. And also, too, when I give the price, listen the first time. And if you never want to have to guess about what time or what price to get in, go to ianinvest.com. Amazing call last night with my Stock Club family. Love you. Hour and a half. Replay will be out tomorrow at 9 p.m. Central. If I made you money, please put yes in chat. You get 3 prices for every asset. And this year, I'm giving new prices every single week. So you don't just have prices once a month. So if you want to get rich from the market and never have to guess where to invest, go to ianinvest.com.
Ooh.
Back to you, Rashad.
Never have to guess where to invest. Okay. Little slogan there.
You know.
Baby.
Back to you guys.
What's the outlook for Eli Lilly?
I think they're gonna be on a tear. If I compare two together, Lilly and Amgen, I think are almost unstoppable. The upcoming pill launch, of course, if Medicaid and Medicare starts to cover the obesity drug, of course, that would give it a spike. But I'm not just solely betting on them because of that particular drug. It's definitely a great addition, but not only that, the executive management is great. Just the talent that they curate and hire there is amazing. They're just a world-class organization. I think Lilly by end of year could be at 1288.99. A lot of room to grow, and they don't. If we're gonna be very honest in that space, Lilly doesn't have many competitors that are equally weighted to them, especially with Novo falling off a cliff last year. Lilly don't have many competitors in that space. I think they'll continue to do incredibly well. I don't know if Medicare will cover the obesity drugs, but if so, it's going to give them a great spike in the second half of this year after InvestFest.
Yeah, I think the pill form is huge, and they'll be reporting on Wednesday. I think that's important. I think Lilly's the appreciation will happen. I think it does grow, but it'll have to do with AI. And we kind of like got a little sneak peek when we were at NVIDIA when we were talking about healthcare tech and all the ways that they're using it to cut to shorten times that it takes to have developments. Their partnership with NVIDIA last year will come into fruition this year. And so love Lilly. I think it's going to be have a huge year. I think it's going to have a huge year, especially if they can obviously get the cost to a point that makes sense for the average U.S. consumer, but also if they can get some of these Medicare coverages, adding not only the GLPs, but obviously the Alzheimer's. They have a runway here that looks really
with that drug.
Great. Yeah, it looks
it's
really
not
good.
talked about enough.
That's a fact.
Yeah.
Speaking of InvestFest, get your tickets.
Please.
August 7th to August 9th in Atlanta, Georgia. VIP will be Black Tie Affair this year, new location. I actually got off the phone a little while ago, cooking up.
Okay.
Yeah, her.
Okay.
And we do always listen to suggestions. So people make suggestions about different things. Read all the comments. We are adding some of the suggestions that people have made. So legendary experience, nothing like it. Get your tickets now. Get your hotel room. Yes, sir.
Well, can I get the feedback from the audience? Do you guys want me to do a presentation again this year, or do you want to see me interview someone about the market?
Put in chat.
Put in chat.
Please, chat.
Presentation or interview. Put in chat.
Yeah, let's go. Let's go.
The new Fed chair. We talked about it earlier. Talked about it earlier a little bit. Kevin Walsh. What's the deal?
I want to, politics and world history is your thing, right? So I wanted to get your take, given that Trump gave Uncle Jerome hell for the last however many years.
What do you think? What you giving Jerome his grade? What's his grade? He's going out in May. What's the grade you giving him?
I gotta be honest, man. You gotta get a boy B+ for what he had to deal with.
B+.
What you give him?
I was going higher, but go ahead.
Hey, okay. I want to be fair, just in case somebody be like, "Yo, you guys are biased," because But I think he did. We didn't achieve the soft landing, but he did. He's what's my man name? Sully, who landed the plane in New York. He is financial Sully, yo. He did an amazing job managing a bunch of crises that he had in front of him. But I'm sure he's glad to be out of there. So I give him a B+. You give him an A+?
I'm gonna give him a solid A because of the conditions that he, like you said, that he was brought to the job in. He brought in during the Trump administration the first time. Part of the Biden administration. Obviously, the pandemic was catastrophic for the market in the month of March. We had never seen anything like that. And the way that we rebounded from that in 2020, then dealt with inflation and how he's handled that. And then that quote unquote stagflation that potentially could happen, and the soft landing that nobody thought was possible, how he's maneuvered that, how he's brought rates down. He's pretty met the metrics that he obviously he wanted to get it down to 2%. That didn't happen. We've seen tech companies flourish during his time as a Fed chair. We've seen the AI revolution during his time as a Fed chair. We've seen growth in a lot of our companies, like the companies that we're talking about now, where, how many $1 trillion companies did we have prior to his run, right? Obviously, like the companies have a lot to do with that, but that's under his regime. I give him a solid A.
Do we give him an A even with all the money that was printed through after COVID? That's my only, and I don't want to go through the history of the Federal Reserve because I like living, but that's the only,
I took the plus off the A for that.
Got you.
Okay. Why you bringing up old shit, man?
Sorry. It's a big number. 25% of all money ever printed in America
ever made.
Yeah, it came in 2020.
It was needed. We needed every dollar of it.
Mm-hmm.
Well,
Shadi, what you think about the Fed chair?
The new one, well, like I said earlier, I mean, he's pretty much his nephew, kind of, by way of marriage. So it is something that he can control the situation, I think, a lot, because the Fed is supposed to be outside of influence of government.
Mm-hmm.
It's an autonomous organization that works free of the influence of government. That's how it's supposed to work. But when you hire your nephew to run the Federal Reserve, that's kind of hard to separate. And like I said, his father-in-law is the one that they said came up with the idea to invade Greenland.
Allegedly.
Allegedly. Thank you.
I got it. Don't worry about it. I got it.
So I think that he's going to do whatever Trump wants him to do. Lower interest rates. That's Trump is obsessed with lowering interest rates.
Yeah.
So you'll see interest rate cut. I know MG the mortgage guy will probably be happy about that. Good for real estate. Some level of stimulus, but I don't think that that's going to solve the problems in the long term.
Great for tech companies too.
Short term.
But it's a bad, it's a bad long term. And why is the Federal Reserve, which is a private entity, bowing down to the White House?
Well, he picked it. I'm sure, like, if there was any opposition, he wouldn't have chosen him. You know what I'm saying?
Yeah.
You know, so
We'll see.
these are the cards that we've been.
But if they don't do anything about the fiscal monetary policy and a variety of other different things, it's not going to matter. And the dollar is going to continue to get weaker, and China is going to continue to get stronger, and gold is going to go up. Bitcoin has to go up eventually, but the American economy is not in a great position for a long term. You're making a lot of enemies, and a lot of people have recalibrated their alliances.
It's a great assessment.
New world order.
Allegedly.
It's word of the night.
Yeah.
What you about to say?
Do you think Duval posted this, and I want to ask you, do you think they killed off the middle class in 2020? Was the printing of that money and COVID a way to destroy and widen that gap to erase the middle class?
Yeah. I mean, the middle class, I think, has been destroyed maybe before 2020, but yeah, definitely that accelerated it. I think that was definitely an acceleration of that, even going back to 2008 financial crisis. And we could talk about that on Blackout, but as far as, you know, how many people lost their homes in that, and that's when housing really became a forefront issue and made a permanent class of renters, collapsed people's 401k, people panicked and sold. They didn't have Market Monday, so a lot of people didn't have the full education. People got liquidated out of their positions. So I think that was the start of it. The pandemic definitely probably accelerated it with the amount of money that was printed. But the middle class, I think, has been at least shrinking. It has been shrinking for the last 20 years or so. And then you add inflation. That's the killer, because even when Epstein, that's what he said. That was one of the things that he said. It was like, paraphrasing, he said that we make money from trading stocks and investing. We're not doing real work. The other people, they got to do real manual labor for work. Like that's not what we do. We're not doing real, which is ironic because a lot of people were like, yo, content creators, you guys aren't really contributing. He said several times, he was like, Wall Street, like, what are they really doing? What are they doing? They're not doing anything. They're making billions of dollars just by trading
on arbitrage
concepts.
Yeah. Price disparities.
They're not doing anything to contribute. Yeah. They're not doing anything physically, and they're not doing anything to really contribute to society. They're not doing anything.
Especially when they deregulated derivatives in before 2008. It was a free for all.
But that's the world that we live in. That's the game that's being played at the highest level. But the middle class is not doing that. Put it like that. The middle class is not taking part in that situation for the most part. They're still working for money, and it's just getting to the point now between the creator economy, Wall Street, and AI. That's what Vlad Tenev said to us. He's like, it's going to get to a point. The idea of work is not even going to is not even going to look the same. in 20 years, like how we even conceive work. People that's actually still trying to, I mean, I guess you still got the trades, electricians and stuff like that. But the people that's still trying to hold on to that, we need more. No, we really don't. We really don't need more. And we really
I
don't.
just told you, for every job loss, you only need 10 NVIDIA GPUs to replace the efficiency of an office worker. That's scary as hell. And we were just at NVIDIA. Trust me, for those you say, oh no, they can't replace it. Some of the work that we saw in those side conference rooms.
Yeah, but they got a garage for each unit. So we saw the autonomous garage, but there's a healthcare tech garage. Like, it's happening. Like, whether you like it or not,
warehousing.
It's
so
happening.
there was hundreds of robots in the warehouse that they're simulating. And this is the crazy part. Even if we make it to outer space or above Earth, they've calibrated the AI to know the differences in gravity for the robots to deliver goods in outer space.
Yeah.
That's scary. Like, they know the weight of Mars and Jupiter and Earth too. And it only takes a day or two for the entire robot force to recalibrate to deliver supplies on other planets.
Yeah, the GPU that goes inside that robot, it takes a day. If they know the level of gravity on a specific place, they can train it to balance itself inside that gravity, right? So the first time you train it, it falls to the ground. Then you train it to Earth's gravity, it begins to learn how to walk on Earth's. Like, it's in the stuff you see is just like, oh, it's different level. It's different level. It's different level.
Yeah.
And then, of course, Elon announced that SpaceX is merging with XAI.
Oh, yeah. Talk about that. Oh, yeah.
It's not the time to play.
Follow the money. Follow the money. We do need more plumbers, but everybody that's telling you we need more plumbers, they're not a plumber. You ever think about that?
That's a good point.
Gary Vee, shout out to him. I mean, he's a genius, obviously, but he's like, yo, we need electricians. Gary Vee's not an electrician.
Go get it over there. I'm gonna get it over here.
Gatekeeping 101.
I hate to be a bad guy, but let's just be honest. Everybody that told you we need more plumbers, they're not plumbers.
Yeah. Show me how you making 30. Shout out to him and Mike Boy, all y'all. I love y'all. So if they clip this up, we love you. But show us how to get 30 million off of the agency side.
Yeah, I'm gonna go get it over there
to hang drywall. Come on. It's a bunch of people in tech and VC saying it's like, bro, y'all making $7 and $8 million off 2-3 deals. So what? And it's good money in plumbing, but show them how to make 10 or 15 million a year.
Yeah. No, that's good money there. That's good money there.
Yeah,
for sure.
If you own a plumbing company.
Yeah.
Let's be honest. But what I'm saying is that they tell you one thing and then they're not telling their children that.
No.
Yep.
They're not sending their children to private school to become plumbers.
No. They want them to, like I said, sometimes in life, people earn money from the neck down, and some people earn money from the neck up.
Hey, yo.
Pause. Hey, yo.
I said some
earning
people,
money from the neck up is wild
it's
work.
crazy. And that feet going down too.
I said some people. You
some
can't
people. Hey, y'all.
Yo, you might know those people. I don't. Maybe you know those people.
I don't. But them rates down though. Depreciating asset.
Allegedly.
What? Allegedly.
Or maybe not.
COVID price has been dead. Hello.
The OnlyFans prices have been up.
Y'all put the Fibonacci on everything. You know what I mean? Since inception.
Historical return.
For
What's
sure.
the return on that?
Okay.
Who's speaking? Who's speaking? William H is a wild boy.
Yo, easy. Who's calling? Wait, who's calling? Who's calling?
Before we bring our guest up, when to take profit?
Oh man,
when to take profit? That's something that's always been a major question for investors.
Can I give him a story?
Yeah.
You want to give him? All right, check this out. Shout out to everybody in EYLU. Shout out to the Red Panda.
EYLU cooking up with the options.
Shout out to, you know what?
Going
Shout out
crazy.
to Red Panda family as well, because before I said it in EYLU, I came to Red Panda and I told them exactly what we were looking at. And the company at the time was called SanDisk, right? And so shout out to everybody that's in SanDisk. I get a lot of DMs about that. A lot of people made a lot of money. Shout out to all y'all. I'm always proud of people that's making money. I'm proud of people that are telling people about the company so that they're making money. So the past 3 days have been pretty crazy. Thursday, obviously, you know that they were reported earnings. We talked about it last week on Market Mondays. Again, I make those phone calls. I'm like, yo, guys, I'm going for it. And they're like, yeah, what? I'm like, yeah, I'm going for it. I'm looking at, what they're projecting after Thursday. They're going to blow out their quarters. They're looking like a 2x multiple on EPS, 2x multiple on revenue. I'm like, this feels like a no-brainer. And they've run up. I'm kind of already leveraged because I'm in a 200 call. I'm in a 230 call. I'm like, we're up 800% on that, 600 on the other. I'm like, you know what? If we get a 540 call here, doesn't really feel like it's out of the realm of something we should do. Plus, we're trying to get better at doing these short-term ones. So I'm like, all right, there's an opportunity here. And so I'm like, all right, I'm gonna do it close to the money. It was at 539 when it closed, and I'm like, I'm doing a 540 call out to March. Obviously, everybody saw what happened on earnings. I got the phone call. I said, oh my, it's up $98 after hours. I said, all right, this is crazy. This is crazy. We about to have a hell of a day on Friday. And we did, right? We woke up Friday, we're up $98. I'm up 107% on that call, right? So I made that trade probably around 2:30, 3 o'clock. I put it in EYLU. Some people got it, some people didn't. All good. So it was an expensive call. It was a big body heavyweight. Y'all know what that means. So it's up 100%. Y'all know my rule. If I get up 100%, I take profit. If I get up 100%, I'm got to take my initial profit out, and we're going to let the profit run. So we take the profit out at 100%. We're at 670. I said, all right, cool. That's a great day. If it starts trading down, I said, all right, well, we're gonna have some levels where we got to take more profit. So it goes from 670. If y'all watch this on Friday, y'all know, got down to 650. I said, damn, all right, let me sell a contract here. I sell one contract. Started with 9. 5 got me my initial investment back. So now I sell 1. I said, all right, okay, down to 3. All right, if this thing gets to 600, I got to sell another one. This is we got to have some profit. It gets down to 600. I take one bet. If this thing gets down to 590, I got to really think about taking everything out and just saying, hey, let's reposition here. Gets down to 590. I don't do it. I'm like, all right, you know what? I still believe in it. I'm still up a couple thousand.
Let it run.
Let it run. Just let it run, right? Gets down to 560, 550. Now we're back at 540. This is like 3 o'clock. I'm like, damn. We're right back where we started. Even though we're not negative because we got it at 437, it's at 440. We still a couple thousand, maybe $1,500. I said, you know what? Has the story changed? Remember I said that earlier? Has the story changed? Well, the earnings just came out. The story hasn't changed. What I'm looking at and I'm perceiving it, I'm saying to myself, look, this is somebody taking people are taking profit, right? This is run up so far. People are saying, we're not sure how much higher this is going to go, but let's take profit now. So we watched the $98 get erased. I said, all right, you know what? I'm going to do something I've never done. We made 100%. I'm going to reinvest in the same call. So I reinvest in the same call. I buy 6 more contracts, right? And I'm watching this thing. I go down to my minute chart. I'm starting, like, Ian, I don't even do minute charts. I'm at the minute chart. I'm watching this thing. At 3:30, I'm watching it climb up. It goes up to 545. I'm like, all right, cool. 550, 555, 560. I said, all right, bet. If we can close around 560, I'm happy. Around 4 o'clock, it closed at 472. I'm like, bet. We're up 12% back in the same position that we just took money from, right? After hours, it gets up to 592. I said, uh-oh. Well, we're about to go on another run. If you watch SanDisk this morning, we were opening up at 650, right? At the peak today, it got up to 676. I said, oh, wow. We actually went 100% again, right? So we took the profit, reinvested it, went back up 100%, and now I'm looking at SanDisk right now. It's going to open up at 682. So now we did 100%, got our profit, reinvested the profit back in the same call, and now we're going to probably be up another 30%. So again, same rules apply. Get my 100%, let the profit run. But having that mindset of like where I'm taking my money out is very important. Some people say it's that 30%, it's that 40%. I like to do it at 100%, right? If I can get my initial investment, let the rest run, we do it. And this was like, I'm just like, yo, man, I've never seen anything like that. Like, I've never done that before. So it was just a wild 3 days. And I don't think it stops. In fact, Mike, can you do me a favor real quick? Can you put that screen up for me, Mike? So I want to explain this real quick, and I'm going to do this as quickly as possible because we got somebody special coming on in a second. But I want to explain what's happening with SanDisk. And so what you're looking at here is 3 different types of memory, right? And so when we're talking about memory, I want you to realize what HDD stands for, if you ever see it, right? That is a hard disk drive. That's when we're talking about high memory capacities, 20 gigs or 20 terabytes. You're going to see that from Western Digital. You're going to see that from Seagate. SSD, that is what SanDisk does. That is a solid state drive. And so here are the differences, right? You see one's faster, one's slower. One has high latency, one has low. One has large capacity. So that means how much it can store. Now, if you look at the last category, HBM, we've been talking about that. That's high bandwidth memory. Those are the Microns of the world. That's the Samsungs of the world. Those are the SK Hynix of the world. The reason that we're seeing the SSD run up is because the high bandwidth memory has a shortage, right? You can see that it's the fastest, right? We can see that its latency is extremely low. We can see the capacity is small, but it's the most expensive and it's inside of GPUs. Well, we know GPUs, NVIDIA's producing those, Broadcom's producing those. We know what they're used for. We know that there's a shortage. And so if we can't have the high bandwidth memory, we got to go to the next thing. Now, they can choose the slower route or they can choose the faster route. The slower one has more capacity. The faster one is actually going to have more functionality when we're talking about AI and we're talking about large language models. Those are the reasons why you're starting to see SanDisk run the way it is. Now, is it going to stop? Not until Micron and SK Hynix and Samsung have done something to curtail this bottlenecking that they have with the high bandwidth memory. And so if you're asking why SanDisk, this is why. Because the HBMs have run low, and so now they got to find a new form of memory. That was a quick session in class. Y'all appreciate it later.
That's fire.
Congratulations to everybody that's in SanDisk, everybody that's in Micron, everybody that made money with Western Digital, Seagate. We all winners if we all invest.
Great job. And can I add one really quick point?
Yeah.
I know there's been a lot of run up in silver and crypto. If you're because somebody asked in chat, well, do I take 100% if I'm in equity? No. You should be looking to hold, but you have to know your exit number when you're investing. So like the first job is to accumulate the capital. The second job is then to preserve. So for those of you who are aspiring, I won't say your name. Shout out to our brother who showed us a screenshot. You hit your goal. So let's say your goal was 2 million. After you get to the 2 million or 5 million, then you want to go safer. That's when the index is really coming to play, or a Microsoft or an Apple, a company that's not going to draw down a lot. But the first half of the game is you accumulating the wealth that you need. A lot of you will be in a great company, Google, NVIDIA, Microsoft, sell at 100%, 80%, and miss 500 or 600% because you won't hold. So know what your goal number is. Please put that in chat from the equities that you're holding. Then from there, you want to go ultra conservative, and then that way you'll be okay. And I think, Rashad, you've done a great job at this. Congrats on a 1,000% gain. But also, I know in your primary investment portfolio, you don't have much drawdown. I think that's the way every investor should do it. Stack the money up, get the good, like for my future traders, like the 523 target on the Dow is amazing. If you do 23 contracts, that's 60 grand. After you can make the 60 grand, put it into indexes and Microsoft and safer companies so you get 25% a year and you're not worrying about a 50% drop. I'm sorry. MicroStrategy is not the way to go after you make 200 grand off a trade to put it there. Make the money first, then put it into safety.
Yo, shout out to you for getting your green jacket, man. I call Shy, say, yo, you got your green jacket, bro, 1,000%. That's nothing to sneeze at.
Yeah. EYO University, man, where dreams come true.
You too can stroll on the beach in Morocco.
It works
for sure. Blue City.
It works if you work. It works if you work. But let's bring our guest up, can we, please? Hey man, how's it going?
What a show I came into, huh? Fed chair switch up, when to sell profits. What's going on, guys?
Hey, brother, how are you?
Mr. Mayor, how are you?
I'm doing well. Thank you, guys.
Yeah, man. Mikey Taylor, entrepreneur, investor, former professional skateboarder turned civic leader. He built and exited a nationally recognized brewery. We're going to be talking about that, selling a company, transitioned into commercial real estate and private equity, et cetera, et cetera, et cetera. Extremely accomplished athlete, now an extremely accomplished entrepreneur and investor. Thank you for joining us. Appreciate it.
Thank you for having me. God's been good.
All the time.
How's Thousand Oaks treating you, man?
You know, it's busy right now. It's going well though. We got it under. We're doing a pretty good job. We're safe. We're clean. We've got good jobs. We're just trying to maintain and push forward.
Amen.
So I want to we're going to talk about your transition from an athlete to an entrepreneur, but I want to just go right into it as far as your decision to actually the idea, right, as far as going into entrepreneurship. Your company got acquired. This is perfect timing because we just got finished talking about selling, like when to sell, when to sell a stock, but also very few people have insight on when to sell a company. So what was the thought process in selling a company? Can you walk us through that journey?
Yeah. So first and foremost, we had investors. So anytime you're going to bring on investors, you're going to have to answer the question, how are they making money? And you're either going to build a business that pays a dividend or you're going to build a business that exits. And so what we did was we got a handful of offers on the table, and then we had to make the decision on if we should take more capital to grow the business to a larger position than to potentially exit in the future. And that calculation just didn't really make sense for us. And secondarily, we were looking at the industry. And at that time in the beer industry, all the big giants, your Miller Coors, your Anheisers, your Constellations were buying. And so we definitely were concerned that once the big players stopped buying, the multiples went down. And so we made a calculated decision. And then in hindsight, we were correct at the timing side. So sometimes it's timing, sometimes it's luck, and sometimes you're able to see some of the data and then make a maybe educated decision.
Yeah, after you make the exit, right? A lot of times people are looking for the next company to build. You kind of made a pivot and went into real estate. Like what was that process like for you?
All right, so I know this is a little bit contrarian, but I was a little bit scared of lightning striking twice. And we went into an industry where we were a little bit of disruptors, and we found a model that worked. And then a lot of the other companies came in and started using it. So over time, it wasn't special anymore. And so I was definitely scared that if I did it again in the beer space, I was going to flounder. So I just switched it, went to another industry, tried to take that model into something nobody had seen before. And then all of a sudden it was blue ocean again. So that was more my framework. I was just scared of doing the same thing twice.
Well, for you, Ian, before you answer that question, because that's actually it. So that's what you just said, Ian. As far as if you option trading, don't try to run the gambit of hitting lightning in a bottle twice, right? Take your profit and put it to a more conservative index fund. So across disciplines, it's a lot of the same practices. So I just wanted to kind of highlight that because that's actually in line with what you just had mentioned earlier.
Yeah, look, at the end of the day, investing should be boring, right? We just want to make it exciting. But when you guys were talking about your buy-sell disciplines, at what point am I a seller? It's really important to establish that and then hold to it. If you just do that, you're going to look back, you're going to be in a pretty good spot.
Why do you think most people don't stick to that discipline of when to exit? And for you personally, what habits as an athlete did you have that made you incredibly successful as an entrepreneur that carried over?
Okay, so why don't we do that? Because we're human and, we see opportunity and we get dollar signs in our eyes. We want more. And that's just something we have to fight, is that side of us. For me as an athlete, number one, I was doing something I loved and I didn't want it to end, but the reality was it was going to end. And how I looked at it was I had sponsors that paid me while I was relevant. And I just felt like they controlled my future, and I did not like that feeling. It's probably similar to just having a job and your boss basically is the decision maker on your future. And there's something that's uncomfortable with that. And so I just tried to put myself in a position where I didn't have to rely on my sponsors anymore. And really what that meant is if I can move out of a position where I was completely dependent on income and start owning assets that eventually paid me, well, I felt like I was taking power away from them and putting them into kind of my future, which I love that feeling once I accomplished it.
So you led a life that you can write a book on. You know, you're a legendary professional athlete in the realm of skating. Then you, you know, had a business that was actually successful enough to actually exit. Then you started to invest in real estate, and now you're the mayor of a city.
Yeah.
I am, yeah.
So how'd the politics then come into play?
Oh, that's a good question, huh? We're gonna get to know each other real good, huh, boys? You know, the politics for me, I was always frustrated by politics. Every time I looked at politicians, they didn't seem like real people to me. They always sold. They never delivered. It was completely opposite from what you have to do as an entrepreneur. So I really had no interest in going into that world. But the only caveat is if you get involved in the local level at the city, it's completely different than a lot of the things we talk about or argue about on the national side, because the decisions you're making are things that you, your family, your residents are feeling. And it's actually, it is political in some regard, but I mean, think about what we're voting on. It's budgets and sidewalks and real estate. It's things that we actually feel and touch every single day. And so I felt like I would get involved there, but that was going to be my ceiling. I never wanted to do more than this. And so I think that's probably going to be it. I do this run and then step out and keep building more companies.
You heard us talking about the new Fed chair. You recently put up a post that Trump's Fed pick could reshape real estate faster than rate cuts. Can you break that down, explain it to the audience?
Okay, so it really comes down. Now, we will see. What I will be completely transparent with everyone here on, you don't know what somebody's going to do until they start acting. So if, Walsh gets in, we'll see. But at least his idea is a little bit different than what the Fed has been probably over the last 20 years, which the Fed has become the stabilizer. It's like they come in and they go, okay, how do we protect the market? How do we protect unemployment? And what that means is when bad things happen, they come in and save the day. 2008 was our most recent, well, you could call 2020 our most recent example, but 2008 was a big shift. And what should have happened is a full-blown crash. A lot of those banks should have completely gone under for the decisions they were making, and the Fed covered them. And so the new potential Fed chair has a different outlook. We'll see if he acts on it. But what it really is stay out of it and be the referee. I'm not going to be the stabilizer. I'm going to be the referee. And what that means is more potential volatility. It means things could crash. But if things crash, you don't have a lot of bubbles created that are held up by ultimately easy money printing. And so that does mean there's going to be some pain. So I want to be careful in saying this. I recognize pain, and that sucks. I don't want things to hurt. But usually what happens is we try to protect pain on the front end, and then we put ourselves in a situation where it's worse for us on the back end. I mean, look at millennials and Gen Z and ask them how everything's going. They're going to tell you it's not going very well. And I think a lot of that is because we put ourselves in a situation where things are so out of reach for so many of us. And I think that's because we've artificially held up the market beyond what it's actually at. That's at least my outlook. We'll see what happens from all of this, though.
Do you think we're too far in the rabbit hole to fix the changes and the pain that Gen Z may be feeling?
I hope not. I really do. I think probably the most fair way to say this is there are some things that could come into play that change everything. Like, you're looking at AI and everything going on there. The potential for how productive this could be and what that could mean for GDP growth could put us in a position where if we course correct on some of this other bureaucracy and, support that we've had, we could right size this thing. That could right size our debt issue that we're struggling with. But I'm naturally more of an optimist. I try to find the potential pathway and focus on that. But there's some things that could come into play that make it worse as well. I just know where we're at right now is not healthy. That's at least my view. What do you guys think? You guys feel like we're in a healthy spot?
Well, really quick, you said there's some things that can make it worse. What are some of those roadblocks or financial asteroids that the audience may not be aware about that could make it worse?
Okay, so I'll keep this kind of high level, and I'll try to make it pretty simple. If you viewed America as us as individuals, we all bring in a certain amount of money, we all spend a certain amount of money, and there's some debt component potentially. We are spending way too much, and we are borrowing like crazy. And the inevitable outcome of that is bankruptcy. And so there's a choice that we have to make, right? If you're in debt, you have two options to get out of it. You either cut back your expenses and put more of your revenue towards paying off your debt, or you increase your revenue and pay more of your debt elsewhere, right? So it's either growth or pullback. For us, I don't think we can save our way out of this. I think it has to be a combo. And we've got to be in a position where we're not giving away the farm. And I think we've just given away too much and we've outsourced everything. So I think that's the challenge. If anyone's a reader in this audience and you want to get caught up on this, read Ray Dalio's books, The Debt Crisis, and everything he's forecasting. That is a potential for us that we have to avoid.
Well, how do you think that we have an opportunity to get out of that? Because nobody wants to, well, at least the Republicans, they don't want to raise taxes. The Democrats don't want to cut programs. And the Republicans don't really want to cut programs too, if you're really honest about it. Because, I mean, the major programs as far as military and health benefits and things that really, really cause trillions of dollars to get taken out, there's no real solution on how to cut that from that. So if we're not going to cut anything and we're not going to raise taxes, I mean, what can we actually do?
Okay, so it's actually really interesting that you brought that up, because I would say that has been a recent shift on the Republican Party, that there's no appetite for cutting programs there either. I think the fascinating part is it's the people don't have an appetite for it. If you're an elected official, what you're supposed to be is a representation of the people who voted for you. And if you ran on a platform of we're cutting, you're not getting elected. And so we're in a tough spot, right? I think probably knowing that, the only real shot is control expenses where they're at and grow our way out. And, I think you could make the claim that AI could get us there, but if the politicians aren't willing to do it, the only option is growth. The caveat to that is, are you guys seeing the percentage of people that are moving into the independent party?
Yeah.
It's massive.
It's
the largest group we've ever seen in history. That could be a tell for what's coming politically, that the majority of people don't have faith in either side. And if we saw a situation where the two-party system didn't control everything, that could be something totally new for us. But with that said, if I'm trying to pick the most likely outcome, it's grow your way out of this.
When you say, just for clarification, when you say grow your way out of this, what does that actually mean though? Like as far as on a corporate side, just to have more corporate profits, because that's not coming back if we don't tax corporations. So when you say,
that's a good question. The large corporation scenario we're in, that's a whole separate
conversation
talk for us.
Yeah.
Right. Just look at it as total revenue into the government. Right. So every single revenue stream that the government has, how do we increase that? And now you could definitely make the case, and I get it, that this is nuance and there's not enough time for this. But if companies are growing and taxes are coming in at a larger dollar amount, well, there's the potential for growth. The large corporations not paying taxes, that's nuance and there's caveat to it. The corporations are paying taxes. It's, at what portions are they taking loss that covers a lot of it, and where do R&D go and where's the incentive go? That's a separate convo.
You mentioned something. You said after this political run, you're going back to finding companies, owning companies, which is interesting because it makes me think of where do you see or what excites you? What type of company would you be looking at of the future, right? It's going to be a little bit different than when you started your entrepreneurial journey. What companies are the wave of the future? Which ones excite you? What are you looking for when you're trying to find one?
Yeah, that's a good question. Now, I heard somebody say, I'm not sure who it was, but one of you guys said that you want people to win with their money, right? If you're new, we want you to grow your wealth. We want you to succeed. That outlook is very much in alignment with me. I want people to understand how to manage their money, how to invest it, and put let's grow the middle class and let's grow it upward. So if you're not in the middle class yet, let's get you there. If you're in the middle class, let's try to extend it up. That's really my focus. That's why we built the business we have now. All the content we put out is financial literacy. We have opportunities for people to invest in real estate with us, whether you're accredited or you're not, so you can grow your wealth that way. The next business I start will probably be in some way aligned with that. I won't tap into maybe a tech platform or AI. It'll probably be around how do I help more people grow what they own.
For the entrepreneurs listening tonight, what matters more to you, the idea or the operator? And if they're looking to scale, like what are some must-haves in business now that will allow them to scale?
That's a phenomenal question. Okay, so number one, this is not to take away from the idea because the idea is incredibly important, but there are more good ideas out there that don't get executed than bad ideas that people try to drive forward. So there is a pairing. You have to have a good idea. You have to have an operator, because if you can't bring the idea to reality and then you can't scale it, the idea is almost worthless in some regard. So if you're a visionary, pair with an operator, bring an operator or a team of operators into the business so that you can actually track your momentum forward. And then it just becomes a game of right person, right seat. What seat do you need? Find the right person and fill it, and then track the progress. The beginning stages are the hardest. So if you're a solopreneur, it's the hardest to go from one person to three, and then from three onward. And so what you're going to have to wrestle with is when you're the solopreneur, you're making all the money. And for a time, you're going to make less than, because you're going to have to pay somebody else to get involved. You might have to give somebody equity to get involved. But two people can go further than one. So the idea is take the hit on the front end, delay your gratification, build the team, and what you're going to experience on the back end is going to be much larger.
So let's talk about real estate. You went into commercial real estate. So you're a real estate investor, but you're also a politician. So I was interested to see your thoughts on this. Is commercial real estate dead? Because we've been seeing, even in New York, the Chrysler building, that's in shambles right now. Like so many office buildings, when you think of commercial real estate, at least on the office side, but a lot of other commercial, whether it's even businesses, they're going online and people are not coming in the same, and everything is changed. So what's your thoughts on commercial real estate in 2026?
Okay, so commercial real estate, just for anybody who doesn't know, is a lot of different asset classes. It's office, it's industrial, warehouse, it's retail, it's commercial multifamily. Office is definitely getting hit the hardest. That will reshape, it will survive. Even though we're going digital, we have not mastered how to work as an organization and maintain culture digitally. And so it's probably going to become somewhat of a hybrid, and I think that hybrid's going to hold. So I think there's a buying opportunity on office where you can buy it at extreme discount. Industrial is going to be here. Retail, I think, is going to still be here as well. A lot of us wrote that off in 2009 to 2014 as e-com started pumping. I think retail is going to stay because at the end of the day, we're emotional creatures that like community. We like seeing and feeling. And so there will be a footprint for that. Multifamily in a lot of markets is correcting hard right now. It's a lot of the markets where the regulation is low and they actually added supply. But here's the thing to know about commercial. Commercial real estate values are tied to interest rates. So when the Fed drove rates up 3x, you watched prices come down because of that. That's very different than how single family works. So we're just in a moment where there's a buying opportunity. I think you probably have a year or so of that, and then we'll see things tighten, and then we'll go through the beginning of the cycle again, and it'll happen again and again after that.
The most important thing is that people will need capital. And you had this thesis on the millennial career crisis that we're in. I had a conversation about that earlier today, and just where we're headed. What's your thoughts on how we combat it? What can we do to, put a dent in it? Because it's a real thing, right? When we talk about the amount of jobs that are going to be replaced, yes, some will be created. But if we don't have income, then we're not going to be able to invest in residential real estate or commercial real estate.
Okay, so there's two parts to that. The millennial career crisis is real, 100%. What AI does and how we're going to make money, I actually think there's a higher probability that we experience something similar to the industrial revolution, where we see a lot of new jobs created because of AI. I don't know if we're all just going to be jobless and something like UBI is going to turn on. Not saying that doesn't happen. I think that's lower probability. I think the big issue with the millennials and Gen Z is it's housing. It's like we got 50 to 70% of our income going towards housing, and the price tag for a first-time purchase is so high. The American dream is taken off the board at that point. And so I think the conversation for housing is more what happened and why are we here? I think that goes back to the old outlook of the Fed. We have allowed a bubble to be created because we are trying to artificially support people in and through. And so what does that mean? Number one, you got to add supply. If our population grows and we're not adding supply, you're going to watch asset prices increase. Some of the other things is it's regulation and politicians. If you're looking at the housing crisis, right? I think both sides can agree that prices are too high. Now it just becomes, what's the solution? And I would say one group looks at the solution as being the government. The government needs to come in. They need to build more regulation. There needs to be rent controls. There needs to be, eviction moratoriums, and that will bring prices down. The other side views it as government, get out of the way. Let us build. I promise you, we will build too much. And when we do, you're going to experience something like Texas is right now. Prices are dropping at a crazy rate.
Yeah.
The true answer is it's going to land somewhere in the middle. Like the private market and the policymakers need to come together and actually speak the same language. They need to get aligned on what the desired outcome is, which is more housing, which will bring prices down. And you haven't seen that happen yet in a lot of the markets. Some you have, but the majority of markets you haven't yet.
We all have one story of an investment that we missed out on that we wish we would have been a part of. Is there an investment that you missed and investing into, whether it's real estate or a company, and what's the lesson that you learned from it?
2011, one of my friends started talking to me about Bitcoin. And he's telling me about this digital currency on some website that you could buy, and it was going to be the future. Mm-hmm. And instead of me asking him questions to learn about it, I looked at him and went, bro, you are crazy. That's some black market stuff. You're going to lose all your money. And he made an astronomical amount of money, and I waited until 2019 to buy in. And so the moral of the story is, if somebody is talking to you about something, treat it as if they have information that you don't have, and ask questions for you to learn. And that message goes actually beyond investments. I think we should talk to everyone that way.
Private equity, for people that may not be familiar, like explain, how is it, what's the real metrics in private equity as far as how companies are evaluated, who gets money, like, what's been your experience with private equity?
Okay, so what private equity means is that you are getting your capital outside of the public markets. You're not going to the stock market for capital. And so that can look like a bunch of institutions or pension funds are giving you money, all the way down to like what my company is. you can invest with us for as little as $5,000. So there's a lot of different ranges of it. Traditional private equity means that you're buying businesses. The real estate I do is technically called private equity real estate, but investing in real estate as a syndication is different than what you're seeing with a business. And what you're seeing over there, the multiples on traditional private equity are typically going to be 3 to 5x. And what they're doing is they're buying a bunch of businesses inside of a certain industry, and they're trying to create efficiencies in it. They're trying to drive revenue up, and they're trying to cut expenses back. And then when they do that at scale, they then try to offload the portfolio and make money. Now, there's a big problem happening in traditional private equity where they're buying up small kind of mom and pop type of businesses. They're running the culture into the ground. The consumer is getting a product that is not even close to as good as, and you're seeing a challenge there. On the real estate side, what we do is we go try to find real estate that doesn't exist or is vacant, and then we pool investors together, and then we go in and we buy it. We usually develop something new, and when you're developing, you have the opportunity to grow the value of it. And so that's how we grow wealth. We just do it as a group as opposed to an individual.
As you look at your career, how it's played out, obviously you've had different multiples throughout each stage, each decade. I wonder what you define as your legacy. Like, what do you want it to be looking for? I know you're a husband, you're a father. How do you see your legacy shaping out?
All right, that's a good question. I would say for anyone who's met me, talked to me, has a relationship with me, I think the only thing I would want them to view what I was while I was here is that I was somebody that they trusted and just overall was like somebody they could count on. For my kids, I think it's more about what my wife and I put into them as opposed to what we leave them. I'm not saying I don't leave my kids anything, but I think it's more important that we instill good character and good values and give them the tools for them to go on and do their thing as opposed to just passing down assets. So that's kind of where we put more of our attention. I want to build them up to be, good husbands and good wives and good fathers and good mothers. But I also want them to know how money works. So I'm not saying that to say we don't teach them about money. We do that as well. I just think that's secondary.
If you can only pick 5 things that you can focus on a daily in your business, which are those 5 things that would give you the highest return?
All right. You have to pay attention to sales. Because without sales, there's no revenue that comes in. So sales is a big one. You got to manage the money correctly. So having somebody on your accounting team is a necessity. The tracking of the different pillars of your business, we use a system called EOS. It's from the book Traction. So if you're an entrepreneur and you want to learn how to manage a business correctly, I'd recommend buying that book. The other one, culture, is a really big one. Make sure that everyone on your team is very clear on where you're headed, that you're building them up and they're a part of the organization. And then I would probably put last, which is the kind of what puts all the glue together, is leadership. Make sure that if you're in a leadership position, you are not the one that's trying to take all of the credit or being the star. I really think a leader is looking at the people next to you and building them up to be something greater than what maybe they even realize. And if you have somebody that you built up and they built a skill set and they end up leaving your company and working for somebody else, don't get pissed at that. That's actually a great example that you did your job as a leader, because at the end of the day, what you're trying to do is build people up.
Well, Mikey, thank you for your time. Let the people know where they can follow you on social media and any initiatives and whatever you want to leave the audience with. But thank you for coming. Very greatly appreciate
you, man.
Hey, thank you guys for having me. It's been an absolute pleasure. If you want to find me, Mikey Taylor is my name. I'm on all the socials, so pick the one that you enjoy the best. I'm the most active on Instagram, but I'm on all of them. And then I have a podcast. If anybody wants to listen, it's called Life with Mikey. It's on all the podcast platforms. And we talk about money, investing, business, entrepreneurship. And then other than that, thank you guys so much. I appreciate it.
Appreciate
Yeah, I
you.
appreciate
Thank you. Thank you.
Have a good night, Mr. Mayor.
Hey, have a good night, boys.
I appreciate you.
All right. Mikey.
Great convo.
Taylor, he's the mayor of Thousand Oaks,
California. Yep.
Thousand Oaks, California. Was that Southern California?
I'm not sure of the location, but we will find out in 2 seconds.
Thousand Oaks. Okay. Very insightful conversation on a variety of different things. And that was interesting. The last question that you asked as far as what's the 5 things? Because I think it's just different. Like, because one thing that he didn't say, which probably would have been the top of my list, is marketing. So I think who you ask is gonna have different answers to that question. But
Southern California.
Yeah, that's Southern.
Yeah, right outside of LA.
My boy know them hills, yo. That boy waves in LA, I'm telling you.
Yeah, shout out to the Santa Monica crew.
Shout out to Cali. All right, before we leave, battle.
Wait. Hold on.
Huh?
You only took a great point. What would be your 5? If you can only pick 5 things to focus on a daily to drive high ROI, what would you focus on?
Marketing, number 1. Because I think that's how people are aware of your brand. And every great brand in the world has had great marketing, great presence in marketing. Marketing is number 1 for me. Number 2, sales is up there, but I wouldn't have sales as number 2. It depends on what kind of business that you have. But I would definitely say accounting on a certain level, bookkeeping, money management, things of that nature. Accounting for sure, that's important. Number 3, I would say sales, because you got to sell something to be in business. That's important. Number 4, operations.
Okay.
Operations is pretty broad, but I mean, communication with other employees, management, having systems in place, having, streamlined communication. So all of that kind of falls in line to me in the operation format. And the 5th thing would be this is up there too. Creativity. I think thinking about what's next, looking at what's happening, brainstorming, coming up with new ideas, testing new products, new ideas, brainstorming exercises, with even talking to different people, bouncing ideas. That's important, because if you don't constantly come up with new fresh ideas or grow on the idea that you currently have, it's not going to work. And an example of that is InvestFest, because it's like we start InvestFest, that's a great idea within itself. But if it would have just stayed at where it started, it wouldn't. You have to add a pitch competition. You have to add the food trucks outside. You have to add you got to add every single year. We add different things to it, because that gives new life to the event. And right now we're adding new things to it. So that would be my 5.
That's great. Troy, what about you?
I'd like his 5. I was going to add, leadership was not in his 5. I'll put that. But I think morale is important too. I think checking the temperature of everybody, making everybody feel involved, but really touching base with people outside of it. I think when people realize that there's a work relationship, but there's also a personal care that you have about them, it changes the dynamic of how they perform. So I would add that in there as well.
And longevity of how long they'll be around too.
Yeah, like some people,
part is very key.
They stay there for 25 years. Yeah, that's right.
What's yours?
I knew you was gonna do this. Good job. For me, invest in the capital so you never are dependent upon audience for sales or revenue growth. Second would be marketing. Third would be operations. Fourth would be conversion and increasing the lifetime value to make sure that they stay inside of your ecosystem. And then 5th would be trading. So investing, marketing, operations,
Yeah.
Yeah, and then trading will be last for sure.
Okay, I'll add like an asterisk one. I think retaining talent. I know he said if your talent leaves, that's a great job. You've done a great leader, but sometimes some talent is worth 2 or
Yeah,
3 people.
yeah,
You
yeah.
gotta keep
Or
your talent
10.
retained. You gotta keep deep mind. You see what I'm saying? You never know what they could produce. So yeah, retaining talent would be
You got to
another thing.
retain customers too. That's also vitally
Retention.
important. Also,
Let's just make it retention.
retention is one thing. You do have to retain customers, but you also have to have more revenue streams from. This is one thing I learned as far as financial advice. Somebody will buy one thing to you. If somebody will buy one thing from you, they'll buy 5 things from you.
Yeah.
So if when you're running your business, keep that in mind. You haven't brought one pair of Nikes in your life. You brought 87 of them.
For sure.
You haven't brought one makeup kit from Mac. You brought 130 of them.
Yep. 12 iPhones.
A lot of small businesses go out of business because they only know how to sell one thing. A person believes in your business, they're going to patronize your business more than once, but you have to give them a reason to patronize your business more than once. So that means coming up with new products, services, new deals, new offers. You got to keep people in the ecosystem of buying from you. It can't be a business is not going to be sustainable if you only are getting one purchase ever in a lifetime of a client. Vitally important.
Let's get out of here on this earnings report. Let's do this, and we'll do the battle next week.
Okay, I'm good with that.
So tomorrow, big day. We got AMD reporting tomorrow. There's a lot of companies, but these are the ones that obviously we've talked about, spoke about. A lot of people in the community have investments in. AMD will be reporting tomorrow, so we'll watch for that. Supermicro will be reporting as well, so interested in seeing that. Wednesday, we got Lilly, which is huge. Amazing. Uber is going to be reporting. Google will be reporting on Wednesday. And then I put a little asterisk around Snap. They're at an all-time low today, which is,
Evan, sell the company, my boy. I love you.
Yeah.
Sell the data.
Amazon reports on Thursday, y'all. Amazon just told y'all that they laid off a bunch of their clients. They sent the email out. Like, that was crazy. They had a little leak of email that they were going to cut the workforce.
30,000.
That was tough. But they will be reporting on Thursday. Usually when we see that, we start to see a company tick up, right? Because when they cut employees, which means that they now have subsidized that by some way by making robotics, which I know Amazon is huge on, right? They cut the revenue out. Well, they cut the pay out from those employees and figure out how they spend that on research and development and subsidize it with autonomous workers. So we'll see, man. Amazon is always an interesting company. I own the shares. I don't trade options on Amazon. That's just
the
my
crazy part. Because of the government shutdown, the job report will be delayed.
Yeah, it's going to be delayed. The partial shutdown. They said by tomorrow this thing will be figured out.
Yeah, customer service is important as well. That's why, not only does Magna run EY University, but she's great as far as having that and having a system in place. And that's one of the things that's vitally important, customer service. So shout out to Magda, shout out to, anybody in the customer service role. That's important. Need to have that at all times. For the question of when to get a will and when to get a trust, I hate to be the one that actually brings up the numbers, but I let ChatGPT do it. No, this is interesting. So according to ChatGPT, under 100,000, you need a will. 100,000 net worth. 100,000 to 250, you need a will plus beneficiaries. 250 to 500, you need a will or a revocable trust. 500,000 to 2 million, you need a revocable trust. 2 million to 2.5, you need a revocable trust, maybe irrevocable trust. After 10 million, you need advanced trust structures. So 2 to 5 million irrevocable trust, 500,000 to 2 million revocable trust. Anything under that, you could probably just get away with a will. If that answers the question.
I agree with that 1,000%. I thought it was a different take, but yeah, I agree with that 1,000%. And to the person who said, when am I going to address the Tim Cook slander? There's no slander to address. I actually talked to a lot of people at HQ, and a lot of people are leaving Apple to go elsewhere. So it's not slander, it's truth. So, or if you don't like it.
Amgen reports on tomorrow as well.
They're gonna do incredible.
Chipotle,
Tough.
Yeah, they had an overwhelming number of put calls on Chipotle. Average spread is about 10%, which is pretty crazy. I think it brings it down to $34. So be on the lookout for that. ARM on Wednesday, Qualcomm. There's a bunch, man. It's a bunch. Another busy week. UBS, Iron on Thursday after close. Roblox.
That'd be interesting.
Yeah.
Mercedes too. She helps out a lot. Does a lot.
Mercedes in the chat right now.
Shout out to Mercedes.
Shout out to Mercedes.
Customer service.
Shout out to everybody.
And somebody say, can you explain the difference between a revocable and irrevocable? Maybe next week. We got to go. We got to pay the bills.
What's that? Yep. Okay.
Time to go.
Yeah,
But next week, stay tuned.
Yeah. When we be in Chicago, I don't know. When the warm up, love y'all. Summertime. Shout out to everybody who watch Blackout. Chicago, amazing city. Houston, amazing city. Yep.
It's been real, y'all. Hey, yo. Happy birthday, Mr. Bilal. Happy birthday. Come on, man.
Happy birthday. And
right there.
Yeah.
Happy birthday, Mr. And my mother-in-law is her birthday as well. They have the same birthday. His dad and my mother-in-law have the same birthday. Happy birthday in advance. Yeah, man. It's Super Bowl Sunday. Who you got?
I'll probably go with the Seahawks.
Yeah.
Ian, who you got?
Seattle.
Yeah, I think so. I think Seattle wins. Yeah. All right, man. Love is love.
And
Be
Sunday,
good.
hold on. My baby birthday, Xander.
Oh, yeah.
On the 7th. Love you. Go to sleep.
This Saturday.
Happy birthday.
A young man came to put. Happy birthday, Xander.
Aquarius. All the Aquarius out there. Shout out to all the Aquarius.
11?
Yeah, you're going to be 11. Yep.
Yeah. Happy birthday, Xander. All right, we got to send something your way, my boy.
Appreciate you. And I'm proud of you this weekend for hooping. He had more points by himself than the other team. I'll see you. Gang. Stay working.
How many points you have?
13. 6 steals. Yeah.
See, he's watching right now. He's watching live. He just gave us a thumbs up.
Shout out to everybody out there, man. Stay safe out there. February, we locked in. Super Bowl. We be back on Wednesday with Blackout, 9:00 Eastern Standard Time.
For sure.
Thursday, 6:00. We got Charlemagne the God.
Yeah.
$200 million man. He got a lot to talk about.
Yeah. And y'all quit hating and say, oh, he really didn't get the 200. Charlemagne not the one that's going to do the headline to be sensational.
But y'all haven't. What have you done?
Hit 200,000.
How can you? We got to stop giving people voices. How can you successfully critique somebody when you yourself have not done anything? Like you haven't done anything. The rebuttal to that is, well, what have you done? You're a podcaster. Well, we built the biggest business festival in the world. We have a New York Times best-selling book. We have 3 podcasts in the top 100, and we grew 3 8-figure revenue businesses. That's what we've done.
Fact. Check my net worth, respectfully.
That's what we've done. But what have you done? You've done nothing. You've actually done nothing. So it's embarrassing to the people that give you a platform. Well, you should be embarrassed yourself because you've done nothing.
Charlemagne's one of the few people who's going to give you a blueprint to also go get the money yourself.
Good dude, man. Good dude.
Yeah,
amazing
great
episode.
person. Put all that hate.
Stop it. Go out and do something, young man.
Please.
Yo, love is love, man. Y'all be good to each other. Stay safe. Stay warm. Be vigilant. And let's grow our accounts. Let's grow our brokerages. More importantly, let's grow our community.
Y'all
be good.
God bless. Good night.